Okay, sports fans, this is 2-2-16, and okay, don't get me going on the Hillary situation. Point two, that is a loss. You know, it's a one win, but Bernie, go boy, you know what's happening here. And the Trumpster, hey, gonna have to dig in, fight for it. That's what it's all about. Hey, what we have for you today, and I'm going to be sending out in the Rolling Heights Gazette, which you can subscribe to, by the way. Just send me your email address. It'll fix you up. And the link to the webinar on performance auditing in school districts, bonds, so forth. A lot of principles can be applied to any number of issues, but we're focusing more specifically on bonds for construction for school districts. And to say the least, the Roland Unified School District is a sham, a shame, a disgrace, okay, for the human race. I'm a poet, yes, I can't help it. Okay, folks, and again, if you want one of my fine shirts there, hey, got a deal for you. Just send me an email request and we'll have it for you. Okay, take a listen up. Talk to you later.
We will take just a few moments to cover some housekeeping items.
In our ongoing series of continuing professional education webcasts, our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize both how you view our presentation and how you interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. For example, you can click the file folder icon to download the group attendance sheet and a PDF copy of today's slides. You can ask our presenter questions during the webcast by clicking Q&A in the bottom left-hand portion of the icon bar and typing in your question. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. We'll ask polling questions throughout today's presentation. Per the National Association of State Boards of Accountancy Webcast CPE standards, CPE credit will be awarded based on your participation in these polls. To respond to a poll, click the button next to your answer. If you're attending this webcast in a group, in order to receive CPE credit, you must complete our attendance sheet, available in the file folder icon at the bottom of your screen. Please have all group members sign the sheet, and please remit only one sheet per group. Also note, today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. CPE credit can be awarded only to participants registered as themselves and is not available to participants who view the on-demand version. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon to open a PDF file you can save to your computer. We'll email a copy of your PDF certificate in 2 weeks if you can't download it today. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Presenting today is Curtis Matthews. Curtis is the leader and partner in charge of Moss Adams' Contract Compliance and Control Solutions practice. He brings extensive construction cost control experience to projects, having led the audit and successful controls implementation of the largest healthcare construction project in the United States. He has helped project owners negotiate favorable contract terms, implement strong project controls, monitor construction controls performance, and ensure that construction projects charges are compliant with the contract requirements. Joining Curtis today is Peter Jensen. Peter focuses on construction controls and construction performance audits for clients in a variety of industries. He's worked extensively with corporate assessment teams, regularly visiting project sites, evaluating internal controls, and assisting with large contract changes. Peter is a certified construction auditor. And joining our team is Stephen Becchetti. Steve specializes in performing construction audits as well as conducting assessments to evaluate the design and operating effectiveness of internal controls over core processes and controls required to comply with contract billing requirements. Steve works closely with education facilities project owners to improve construction program processes and controls. Welcome to the program, gentlemen.
I'm Curtis Matthews, and we appreciate your participation in this webinar. We hope to make it a good experience for you and to provide a lot of information that hopefully that you may not have had otherwise. The objectives of this session are to identify the purpose and application requirements of successful performance audit programs, to give you good perspective on current construction program performance against current construction program against performance audit requirements, and to better understand program good practices. Basically, what you're going to come away with from this webinar is an understanding of a capital program, how the audit fits into it, how the audit is integral to this. You're going to learn about professional standards that need to be applied in order for your performance audit to achieve its desired results and to be credible. And this webinar is going to provide you a whole lot of information that may make you step back. You may step back and look at what you've seen in the past in terms of a performance audit and compare it to the professional standards we're going to cover today and say, I think that there are some things we can do to up our program and to make our program more successful. And if we achieve that outcome, we think that'll be wonderful for everybody that's participating. Now, there's a wide range of participants here today. This program was geared toward educational organizations. I will tell you that the materials that you'll hear, the vast majority of these materials are completely transferable to other industries. They're relevant to other industries, to other types of organizations, I should say, whether they be government, private. So I think you're going to have a good experience, bottom line. We're going to make it such. Our agenda is to talk about the current situation with educational facilities. That's kind of how we started it out. Then we're going to move on, though, and talk about construction programs and why they're so risky. We'll give you perspective on common construction exposures that we've seen. And then we'll give you a whole lot of good information, hopefully, on the application of performance audit standards and best practices for your organizations. So with that, I'd like to turn the time over to Peter, who will cover the current situation with education facilities.
Good morning. Thank you, Curtis. As Curtis just mentioned, some of these are going to be more applicable to educational facilities, but a lot of this is going to be applicable to almost any industry. Some of the major factors right now in the education facilities, but also throughout the industry, are going to be listed in the next couple of slides. A couple major points I'm going to point out, though, involve stakeholders. Stakeholders for projects can be almost anyone. If we're talking for a government facility or somebody receiving federal funds, it can be almost every taxpayer would be considered a stakeholder in your group, not just the management or the board or the end users of the facility, but it could be neighbors to the project, could be parents for a school district. Pretty much anybody can be a stakeholder. And we've seen in a couple different groups we do performance audits with where it can be one or two stakeholders that have a very minimal interest in or have a very minimum part of the project, but they have an extreme interest in the project. Their need and desire to have transparency in the program, this is where a performance audit, something a performance audit can really cover and show that you're getting an independent look and transparency of your overall program. Curtis is going to talk, sorry, I hopped one slide too many. Curtis has covered a lot of the GAGIS requirements in depth a little bit later in the presentation, but as far as right now with the overall construction industry, 5 years ago it was very easy to get a contractor, a very good qualified contractor. There wasn't as much work. Funding was a little bit tighter back then. Now there's a lot of construction going on, whether you're in a city and you see all the tower cranes up or you're trying to go out and get bids for projects. What that means for you as an owner of construction projects or a construction program is that getting a qualified contractor can be difficult right now, and the pricing with subcontractors and all of that. So having good controls, having good policies around your construction program is critical right now, so that you make sure that when you're selecting your contractors, you're going through a procurement process, that you're vetting out contractors that aren't qualified for the type of work you're doing, making sure that the bid packages are the right size. All of these are things you're going to want to be looking at as part of your construction program, so that you're getting the best price with a good qualified contractor. And our final slide on the educational facilities current situation, really the lending requirements, the interest rates are still good, so there's you can get good rates on things, but it can be very difficult to qualify for some of this stuff. The bonds money that's coming out from the states we've seen is tightened up lately, so getting those funds can be difficult. And really the consequences of failure can be very strong. We've seen there's issues with multiple different school districts where they have people taking bribes, taking funding, spending money in ways that isn't best for the district. There's not a lot of transparency behind some of this. And we've seen people get indicted for this. We've seen people get in trouble, got kicked off boards for this. I mean, there's multiple examples in different states, in different industries, whether it's the director of facilities, CFOs, different people within organizations getting in trouble for some major issues with programs. Tanya, moving on to our first polling question.
Thanks, Peter. So, do you currently have a capital construction program? Again, as a reminder for those of you who may have joined us late or missed our housekeeping video, please select the radial button next to your answer and press the submit button in order for your answer to be recorded. If you are attending and wish to receive CPE, you will need to answer 75% of the presented polling questions. So we'll give folks just maybe 10 more seconds of time so we can get everyone's answer recorded, and then we'll close the polls. One thing additionally worth mentioning before I close the polls is if you are having trouble with your audio, it is on your end. There is not a dial-in number for this webcast. So we'll go ahead and close the polls.
That's great to see. Most people on this call do have a capital construction program going, and even for the folks that don't, I mean, whether you have an actual program that's doing it or not, all we're talking about here is the performance audit sides of looking at a capital program to make sure it's the most efficient and the best it can be, making sure you're meeting your goals of your organization. So it's great that a lot of people on this call, this is directly relevant to right now, and even the ones that aren't, I'd say at some point your organization is most likely going to be doing some type of project where this would be very relevant. So Tanya, moving on to poll question 2.
Thank you for that, Peter. So what is your capital program's most significant risk? And again, if you don't have a capital program, please select none of the above or it's not applicable. And please select a radial button next to your answer, press submit. And we'll go ahead and close the polls.
Great. So again, we see across kind of all these areas, and one thing, this is going to kind of leapfrog us into our next section, but usually when one thing's affected on a project, we usually see a ripple effect across the entire project. So example, for scope and change orders could be the riskiest part, but usually when there's issues with the scope or change orders, for example, if you're having issues with change orders on the project, it definitely is going to impact your budget and the schedule involved. So getting into the next set, what we're really talking about in the performance audit and this is we're trying to limit the exposure of risk. And so to get into that is some of the areas where there are the most risk in construction programs are listed here. Most, if not all, organizations on this call are, they're not development firms, they're not construction firms. This isn't your everyday business. So being construction is not your primary focus. It sometimes doesn't take enough of a relevant situation where the amount of dollars that your organization is spending, though, on construction and developing new facilities, repurposing facilities, is pretty significant to the overall profitability and financials to the firm. These projects also, when you have a construction project, whether you have a big crane out there or you have to close down streets, it has a lot of view from the public. So public always has interest in construction projects. It's another reason why safety and quality and environmental are major parts of the project that need to be also included. Common construction program exposures. Really, as an organization, the priorities of you want to ensure that the priorities of your project meet the plans that you came up with at the beginning. We've seen multiple times where organizations have done great planning. They've gotten a lot of people involved with the planning, and then they go to build the project, and it doesn't meet what their original plans were. And once that happens, it's very hard going back. That involves change orders, involves a bunch of processes. So making sure that the procurement side is accurate. We've also seen organizations not spend enough time in the planning side of things where they don't get the right people in the room, they don't involve people at the beginning, and then so the construction team is really the people driving what the end product's going to look like, and that's another bad spot to be because the head of construction, the head of facilities probably doesn't know the best as far as what the end use is going to be or what the end use needs to be for the organization. Other things to be aware of cost escalations, overcharges, and costly practices. We do a lot of construction cost audits as well. I've never seen a project where we haven't found something where there's not unallowable costs put onto the project. Many of these projects we're auditing have very large amounts that are not allowable per contract terms. So having the control set up on how you're going to review costs, how you're selecting contractors, big part of a construction program. Excessive requirements and scope creep. This is really talking about where a majority of you said that one of your biggest risks is the scope, the change order management. Really, first, it's at the very beginning is developing the plan so you know what your project wants to be. Where contractors make the most amount of money is in the change order business. I used to work for a big general contractor, and change orders are not a bad thing from a contractor standpoint. A lot of times they get a charge for additional costs that they might have missed in the estimate time. They might be able to also increase their fees. They can adapt for escalations that might not have been built into the contract. There's a lot of things there that in the change order processes where contractors can do very well. Being able to limit those with the initial project management, and then also once those change orders are coming, how are you efficiently evaluating those? How are you making sure that that cost is actually allowable, that it's not duplication of scope? There's a lot of areas here where there's risk on the owner's side to manage those change orders and also fairly evaluate them. Moving on to polling question number 3, Tanya.
Thank you, Peter. So is your organization currently receiving annual performance audits in relation to your construction program? We'll give folks just maybe another 5 seconds, and we'll go ahead and close the polls. Be sure and press the submit button in order for your answer to be recorded. And we'll go ahead and close the polls.
So this is not surprising to us. Obviously, some organizations are required to have a level of performance audit. Basically, if they have federal funds or Prop 39 for school districts. If you're not, I would be looking at those slides and seeing what are some of these things that Curtis is about to talk to and Steve's going to talk about that could really help your organization. And if you are currently receiving performance audits, are your auditors really meeting all these things, the requirements Curtis is going to talk about? Are they addressing all the things that you really want them to address? Do you feel like you're getting value out of this audit and the services you're getting? So hopefully this helps you understand some of these questions. And now turning this over to Curtis to talk about some of the why you would want a performance audit.
Okay. Well, there are a wide variety of reasons as to why an organization may want a performance audit. In some cases, it's just statutorily required. For example, in California, there's Proposition 39 that applies to bond programs at school districts and community colleges, and basically it's required. It's absolutely required, and the requirements have been significantly increased from when Proposition 39 was originally passed in the state. Now, professional standards have been introduced and are required because of the quality of the work that was being done prior to the adoption of those standards. Another reason is your stakeholders want to apply best practices in the program processes and controls. Those organizations that desire to get the most out of their capital programs through effective performance audits deserve a whole lot of credit for wanting to do the very best they can with those precious funds that they're trusted with. And typically, our experience has been when they conduct a performance audit, they get a whole lot of kudos from, especially a performance audit with good scope to it, and that really hits the issues that need to be addressed. They get a whole lot of benefit from that as administration of the organization, as leadership of the organization, as well as those that are stakeholders in the program that are pushing for a good, solid performance audit with a good breadth of scope. All these people that I've worked with over the many years I've been doing this have seen a lot of benefits that have come to their organizations from hitting those areas that can provide the most improvement to the program. In addition to that, there's a whole lot of stakeholder assurance that can come from a properly conducted performance audit. It provides a whole lot of credibility, really, to the requester. Often the public and other stakeholders have a vested interest in their capital program and need that independent assurance and trust that their monies are being spent prudently. And having that independent third party look, address, get to the facts of what's happening with the program, make best practice recommendations, provides a whole lot of help to organizations that conduct a performance audit on their capital program. So what is a performance audit? And believe it or not, I think there's a lot of questions around what is truly a performance audit. And believe me, I've seen a lot of reports that purport to be performance audits that I'm not really sure really cover all the standards, that they don't actually cover all of the standards applicable to a performance audit. So performance audit is required by general auditing standards. That's what the GAS stands for. Basically, the main purpose for a performance audit is to provide assurance or conclusions based on an evaluation of sufficient appropriate evidence and against stated criteria. So let's dissect that a little bit. Dissect the standard and how it defines a performance audit. So essentially, you have to have objectives for your performance audit. Like what are the areas of interest that you need to address? For example, were the monies being used for what they should be? Were we paying more than we should have on this contract? How do our change order controls look, as Peter was talking about? All those areas can be objectives and many more, and essentially the organization will typically come up with a good set of objectives, and that ultimately becomes the scope of the performance audit. But the performance audit is mainly focused on improving operations, reducing costs, facilitating decision-making, helping to facilitate decision-making by the parties, by providing them good information about what's happening with the capital program, and certainly it contributes to accountability. A performance audit is significantly different than, for example, an audit on financial statements, as you can imagine, or an agreed upon procedures is really an attestation engagement that's different from a performance audit. In fact, there's really only one area of standards that are promulgated related to performance audits, and those come from the General Accountability Office of the United States, and generally the general auditing standards are those that are most are the only standards actually that organizations can really turn to in conducting performance audits and applying them to the objectives that they've set out for those performance audits. So within the general government auditing standards, there's generally accepted government auditing standards, which is GAGUS, is the defined term, and GAGUS essentially specifies the requirements upon which a performance audit can be conducted. So if you're seeing a report, or you're a recipient of a report that doesn't apply GAGUS, it's really not adhering to the professional requirements and standards applicable to performance audits as established. And then one might ask, well, why are professional standards important? Someone might ask that. Well, it's extremely important to have professional standards in the conduct of an audit, and it's very important to apply the correct standards in the conduct of that audit to provide, number one, credibility for the user of the report, for the user of the audit, and two, to get the desired outcome that you're looking for from the audit. If you really want to understand, certain aspects of your bond program and how to improve them, you absolutely have to apply professional standards to accomplish that purpose. So we just heard about a lot of construction program risks. It could be management reporting, it could be the contracting process, could be procurement, payment controls, the schedule related issues, could be protection of funds and using them for approved purposes. There's a whole lot of reasons why you want to understand how your construction program is performing, and you absolutely need to use these professional standards to get to the bottom of where your program stands and be able to get the answers that you're looking for. Otherwise, I would argue, why do the exercise at all? Why, if you're not going to do it right, then why do it at all? It would be my question. And I think for those of you that are participating, we compliment you for your interest in this topic, and you're among those who want to do this right and want to have a credible performance audit. So within the performance audit, it's not. Some people are of the opinion that when an audit is conducted, that it provides absolute assurance, and it doesn't. And the public needs to be educated on that. This concept needs to be reinforced. What a performance audit will provide you is reasonable assurance that the results of the audit address the objectives and provided a result that is accurate and provides the information that the audit is conveying. So essentially, it's critical to understand that a performance audit is not going to provide absolute assurance that something, that an objective has occurred, or, but it's providing reasonable assurance. In addition to that, the body who determines how far to go in an audit, how much to test, what to test, the depth of inquiry that's made and documents that are received, is going to be the auditor, as defined by professional standards, as defined by GAGAs. The auditor is the one who ultimately has to make decisions regarding how much work they're going to do. If you are doing an exercise and you're doing an analysis of a capital program and you're not applying performance audit standards, then it's really left up to question by all parties as to who is responsible for determining the scope of the audit that is ultimately performed, in terms of the level of testing and inquiries that are made, as well as, there's a lot of questions around just how that audit was conducted and what reliability can be placed on it. So with that, I would say this, the takeaway from this particular slide on the requirements of a performance audit is, one, significant planning effort is required to conduct a performance audit. Your performance audit has to be risk-based, which means really understanding the program and the risks associated with it in the areas related to the objectives of the audit. And also, I think the other key takeaway from this slide is, for the audit to succeed, those that are overseeing the audit and managing it from within the client or organization, need to demonstrate competence and understanding of the subject matter that we're covering today. I think the takeaway here under the requirements of a performance audit is really your performance audit team can't just be people who, are just don't understand, we'll put it this way, the people that don't understand the industry, that don't understand construction programs. If your team is solely includes only people who really don't understand capital programs like the ones that you have, then generally speaking, that's not in conformance with professional standards. Professional standards require those that are conducting the audit to be familiar with the subject matter that they're auditing. And there's no way around that. That's an absolute requirement. And the quality of the output, as many of you know, is going to be directly related to the competency of the team that's doing the work. So we'll just kind of leave it at that. So I guess the other concept I would like you to take away from this slide is, when you know the subject matter and you plan well, you actually know what to ask for in your document request. For us, our audits we do about 40 to 50 of these a year. And construction audits, we'll say 40 to 50 a year, capital program audits, related audits. And our document requests are core and key to our ability to efficiently work through the audit. So to the extent that you have a well-defined set of documents that you need to get, you're able to convey that to your client, the client's able to see, okay, here's what I'm going to need to gather. You're going to be able to have a discussion around that in an entrance conference and be able to gather that information. The document request is core to a successful performance audit, and it certainly provides for a cost-efficient project. So in terms of, let me just step back just a little bit here. So I'd like to kind of give you a tip here from this slide, and that's basically, make sure a lot of you are having performance audits conducted. Make sure your performance auditor provides a scope memo and clearly defined audit milestones. This is where we're going to be at this date. This is what we're going to have. Obviously, that document request helps to set the stage for that I talked about. But it's going to be important for you to be on the same page and understand that your auditor is truly addressing the objectives that you have for the performance audit that's going to be conducted. And the other thing I'd like to bring up is that, you know, the staff of your auditor and how that audit firm is structured and how the audits are conducted truly requires review of the work that's being done and the application of that review by trained professionals in a structure that documents the review of the work of the staff. If you know, I think organizations can run into trouble that are out there doing this kind of work if they don't have sufficient depth in their organization to conduct a thorough review of the work that's being conducted. So we always err on the side of making sure that there's, you know, multiple layers of review, more than one eyes on the subject, so that we know that when we issue a report that we're confident that it's complied with the professional standards. So what's required in terms of reporting? That's kind of the last what's required here slide in the performance audit. But essentially, you've got to lay out all these elements in the audit report. Your objectives, your methodology, the observations have to be supported properly with appropriate evidence, sufficient evidence. There has to be support for the conclusions, a basis for it. Criteria needs to be applied, and that can be a big challenge for organizations to make sure that the criteria that is being applied in the audit is measurable and is directly related to the achievement of the performance audit objective that you're wanting to accomplish. And that requires, again, goes back to the upfront planning. Having a good understanding of that criteria allows you to easily put that in your report at the end, like I'm talking about here. You have to report on control deficiencies. You have to report on you know, any kind of fraud, of course, that occurs. That needs to be reported. And the reporting needs to be objective. It needs to be such that it really, the audit stands on its own. I often tell our teams that, you know, when we're out doing our audits, our performance audits, you know, our work has to stand on its own. You know, and our work is for, you know, they call it public accounting for a reason. It's because you're serving the greater public, you know, in the organization that we're a part of. But when you're doing this work, it's very important to call it as you see it, which is what we do. And that means good practices as well as improvement opportunities. You know, you'll find that organizations need to get a good perspective on the results of the audit, and it's actually a core and key professional standard for the auditor to provide perspective on just what they've looked at. So I would say to you that there's a lot of critical reporting requirements that are needed, and it's going to be important for you to ensure that your report has these, because everyone that is a stakeholder in your program is going to get a copy of this report. And some of the people, the recipients of the report, are going to know the difference between a well-run audit and one that's just a compilation of information that it doesn't really adhere to the standards that provide for these specific areas that need to be included. Including background information, your conclusions, and the reporting. You know, you have to have the reporting views of the responsible officials, which AGUS that we just talked about. It didn't specify the application of professional standards. It didn't have criteria that was being used to measure the program activities against to determine whether or not they're achieving their objectives. There wasn't really you couldn't really see a degree of objectivity in that report because of that. And certainly there were no internal control deficiencies reported, but there were issues that they attempted to bring up in the report in sort of a way that the report kind of read like a novel that didn't really have a real ending because the conclusions weren't what it should be. So it's this kind of thing that a knowledgeable user of a report, and a lot of you are, I know who's on the call here, a lot of your organizations have people within them that know the difference between a well-written report and one that isn't. So, all these slides will be available to you. These are all takeaways. You can use them and measure, what's happening in your program against what you're getting. And of course, the reports need to be properly distributed to those charged with governance, oversight committees, management, and other key stakeholders. Required performance auditor qualifications. The auditor themselves, in order for the performance audit to be in compliance with government auditing standards, just professional standards as a whole, needs to satisfy these requirements. They need to have these capabilities. For example, they need to understand the concepts and skills required just to conduct a performance audit. They also need that capital program expertise that I talked about earlier. The auditor clearly has to be have freedom from a conflict of interest, and also needs to be independent. Needs both, and so they also have to have, and this is unique to get, there's very specific performance audit CPE requirements that are essentially required by GAGAS, by Generally Accepted Government Auditing Standards, that every member of the audit team needs to have. The auditor needs to have a system of quality control. I mean, our larger firms like ours, spend a lot of time and money on having systems of quality control within them so that the work that comes out of that performance audit is reliable and compliant with these standards that require a system of quality control. And that system of quality control has to be reviewed by an external peer organization every 3 years. These are stipulated, specified requirements in Generally Accepted Government Auditing Standards that need to be adhered to. So with that, I would like to turn your attention to some polling questions here, and we'll let Tanya take it away.
Thank you so much, Curtis. A lot of information and great information. So have you questioned whether your performance audits meet these requirements? And as Curtis mentioned, the slides are available. You'll be able to take them back, question your program, take a look, make the comparison. So make sure your program is doing for you what it needs to. For your polling question, please be sure and press the radial button next to your answer and press the submit button. One thing worth mentioning before I close the polls is if you do have questions and have submitted them through our Q&A feature, if we have not gotten to your questions, we will follow up with you afterwards. We'll do our best to cover any questions in the time allotted today. So with that, we'll go ahead and close the polls and take a look at our results.
Okay, great. So this is Steve Bicchetti. Thanks, Curtis and Peter and Tanya. So it looks like a lot of the results are in, and about a quarter of them that you guys are compliant with the requirements. About 15% is no, and then 30% is not sure. So for the ones that are no and not sure, you should probably figure that out to kind of make sure that you guys are in compliance. Okay, moving on. So what does the capital program performance audit cover? So a performance audit addresses the design and implementation of controls needed to effectively and efficiently achieve the construction program cost, scope, schedule, and compliance goals. So basically, controls need to be designed and implemented to ensure that the capital program is developed, managed, and measured in a way that achieves your construction program goals. We've listed a couple of specific areas of emphasis below. For example, program goals need to be achieved. So for this one, the master plan is critical. The priorities need to be developed and established. The scope and cost objectives need to be identified. Budgets need to be approved. Revenue inflows and expenditure and cash outflows need to be effectively managed. And results versus budgets and forecasts need to be analyzed, assessed, and reported to your senior management, the board, and or your oversight committees. Another one is extension of facility lives. So when you guys get these funds, you need to determine whether you'll be, for example, building a new gym or rehabbing an old one. So all these decisions cost money, and some cost more money than the others. So they need to be analyzed, they need to be reviewed, and they need to be communicated so that you get the maximum usage of the funds and that they're spent in line with the master plan priorities. The next three, compliance, communication, and use of bond funds are critical. So for example, compliance. If for Prop 39, schools need to confirm that the funds are only utilized on projects and scopes that are specifically addressed in the ballot language. Communication. The board, the senior management, the oversight committees need to understand how the money is being spent, and they need to understand the procedures and controls that are in line to kind of make sure that your master plan priorities are getting taken care of. The use of the bond funds. You need to ensure that the bidding procedures are in line, the procurement and bidding procedures are in line with the best practices and state regulations to ensure that you're getting the best price and contractor for each cost objective. Moving on. So here we have some example of school construction processes covered by performance audits. These are critical things you want to get from the presentation. Here are some great areas of focus to either develop your own program or set criteria and or audit objectives for your audit. So as discussed earlier, programming and planning is huge. The master plan needs to be developed, managed, and results need to be reported. Financial and budgetary management, which kind of also applies to some of these other line items, for example, capital program monitoring and oversight, and accuracy and completeness of capital program reports. Again, this is my favorite because the reports that go to your senior management, the board, and oversight committees need to have enough information. It needs to be summary where they can make key decisions, but it also needs to have enough detail where they can kind of understand what's going on. So, for example, at the top level, you kind of need to know how much do I have to spend, what have I spent, what's been committed, are there underages and overages at the program as a whole? But you also need the detail that kind of to confirm that some of these issues aren't netted. So for a perfect example is if you have a material overage in one project, you need the detail to ensure that maybe another project, they're not reducing scope to net it so that the total bond program is no overage or underage. And maybe that's the right decision that was made, but the detail needs to be there so that even a non-construction end user of the report can see that underage or overage, ask questions if it's not sufficiently supported in the report, just so that visibility is there. Moving on, some other lines that kind of group together are the program governance and approval controls. This kind of goes in line with the completeness and accuracy of policies and procedures, compliance with policies, procedures, etc. Let's go back. So basically for these, keeping it pretty quick, these just need to ensure that proper segregation duties are implemented, that they're occurring, and that over all the different functions of the area that the contracts, procurement, project management, finance are all covered. So we'll go through this next slide real quick. So contract compliance, change orders, construction quality controls, are you kind of getting what you're paying for? Allocation of administration expenses. So for this one, are you making allocations or are you doing time card support? For Prop 39, maybe an allocation isn't the right method unless you have a good cost basis. Project closeout controls, this is another big one where are you getting lien waivers? Are you getting your punch list to make sure that any outstanding items are closed out at the end? And kind of making sure that you're not getting change order work for scopes that were originally included in the original agreement. So we will move on to Curtis for this next slide.
So let's just, before we do the next slide, let's just step back for a minute, okay? So, not to that slide though. So what does a program cover in education, these areas? But when it talks about education program goals, but you could put in the word, county program goals. You could put in the word high-tech company program goals. You could put in wording of university education program goals. I mean, these issues that need to be addressed, whether they be facility goals to achieve the facility purpose, or the length of life of the facility, or compliance with the funding requirements, they're all relevant to it. See, I was just at a hospital a week ago, and they basically had issues because there were delays on the project, and the bondholders are wondering about just what's going to happen here with their project. So we're in there, helping to address that issue. These two slides, you can take, and these come from various performance audits that we've come in touch with, and we'd like you to think about these areas as you're defining the performance audits that you're going to conduct, so that you can really benefit from what we've seen from looking at a large number of performance audits that we've been involved with. I want to bring your attention to this slide, which has to do with construction program timing versus performance audit scope. So in a construction program, or even in a project, it goes through various stages. It goes from planning to programming. Planning is where you have a business plan, a concept of what you're going to do. Programming is where you reduce that down to general concepts for the facility. Then there's design, where you got very specific designs. This is what we're going to build to. And then construction, where you actually do the construction and the building work, and then completion and closeout. Well, before you move from planning to programming, or programming to design, or design to construction, or construction to closeout, you really need to have a good understanding of the application of these core controls that we're listing here before you move to the next step. For example, before you're going to be able to do a master plan for your construction program, well, you have to do a needs assessment. And believe me, I've seen where I was on a $5.5 billion program, literally brought in. They were having trouble spending their money, believe it or not, and hitting their due dates because they hadn't done an adequate needs assessment. They didn't know where their facility stood against that criteria I just talked about in terms of how long the facility needs to last and the purpose it needs to achieve. They had no measure against how that facility stood against from a modernization or a renovation standpoint against where it needed to be. And in terms of new construction, you got to understand your population and your head count and how many people are going to be required. And that all starts in the planning stage. And that's just one example of these. Funding has to be aligned properly. There needs to be scope definition sessions. You're going to save more money and be more successful on your construction program if you're able to, get these activities on the left-hand side of your screen addressed early on and addressed well before you move into actual design and then construction. Once you're in construction, you're locked in. Your scope is generally locked in, or you're going to be facing change orders. Now, can there be savings in the construction area where you're going to do a performance audit? Absolutely. You could be overcharged. You could be charged for change order work that is not necessary, or it's not priced in a way that it should be. And certainly on the completion and closeout of the project, that's where it all comes together. And you, again, have to make sure that you've got all the deliverables that you need to have to be successful with the facility that you're going to in turn operate. So just the takeaway from this, what I'm giving you here is, as you move through the program, you should do performance audits along the way. And you should understand where you stand against good, strong controls before you move from planning to programming to design to construction to completion and closeout. So with that, I'll turn the time back over to Steve, who we'll cover some success stories from, or I don't know if these are exactly success stories or just stories, but these are findings from performance audits that we've conducted. I guess it's a success. It's a success, I guess, because we found it. So.
Yeah, great. Thank you, Curtis. So we'll kind of go through these quickly, but with enough detail. So the first one, provided staffing benchmarks to make needed resources available. So this kind of goes with the staffing plan. We see a lot of programs that they're either picking up with a lot of construction activity or they're winding down. So if it's winding down, do you have the right amount of personnel on the project? Same with if it's ramping up. So both have their risk areas. So for example, if you have too little people, there might be control breakdowns. There might be material issues that aren't reported up. If it's winding down, if you have, like, for example, a Prop 39 funding, you might be overcharging the bond fund by having too many project managers when there's not enough construction activity. So this can result in a lot of savings on both directions. Improved project management cost reporting. Again, this is huge. This is kind of making sure that the timely data, accurate data in the right format is provided to your senior management, your board, your oversight committee, so that they can make the best informed decisions based off the most recent information. If critical decisions are delayed, we've seen plenty of cases where it leaves the material issues and cost overruns. So that's a big one. Identified excessive change orders. So again, this is another big one. There are many ways where change orders can be non-compliant and result in material overages. For example, like, let's say that there was a design error or a construction error, and they include that in a change order. You need to make sure that the change order only includes costs that should be billed to the owner. So change orders can be very big, so even small percentages for insurance or fee calculation error can result in big savings. Okay. The next slide, which are some other good examples. Improved operating standards and procurement processes. So, for example, are you reaching out to the correct contractors? Do you have a process in place to ensure that the scopes of work and scheduling requirements are clear within the contract language? So, for example, let's say that you're a school and you don't specify exactly when the scheduling is going to be, and you figure out before that that's a time when you can't have construction for safety reasons. Those costs are going to be pushed off to you. So you need to make sure that from the planning stage that everything is documented correctly and agreed upon, and that you're reaching out to a size of contractors that to make sure that you get the best contractor for the best price. Eliminate duplicate payments. So this is a pretty easy one. So, for example, like if you have a GMP cost reimbursable contract on one of your projects, how are you reviewing the billing submissions? Are you going line by line? Do you have all the cost support? We see plenty of cases that invoices show up in multiple invoices to the owner. Some of them can be small that add up, or some of them can be pretty big. That you only need one to kind